Hey, welcome back. SF Live, episode 254 on this Monday. It is Bloodbath Monday, and I'm not sure why I'm smiling. I should be crying, but it has been brutal out today. I'm sure your watch list, your portfolios have been slaughtered. There's no better term today as well. Gold is only down $30. We're below $1,900 again, but market sentiment seems like everybody's running for cash. But I want to sprinkle in a bit of joy here because I got Ernie Mast here with me. He's a president and CEO of Doré Copper, and late last week, they put out some drill results from one of their spokes, the Quilliam Project that they're operating together with Argonaut Gold, and he's going to catch us up on the results of the project and what does it mean overall for the company. And let me actually switch over to my guest and welcome Ernie. Ernie, thanks for joining us. How are you?
Very good, Kai. Pleasure to be on the show again.
As always, you're a regular, so and you're in Chibougamau. You're not in the office. You're not working from home. You're actually in Chibougamau. How are things on site?
Things are good on site. We're just getting into the period where the snow is starting to thaw. So we're about a month or a little over a month behind what you would get in southern Ontario and southern Quebec. So still have a lot of snow on the ground here. However, we're in a phase where it's above zero during the day and below zero at night.
I can see you're saving money because you're wearing a jacket inside. You're an exploration company hunkered down, eh?
Oh, definitely. And I'm also going to go for a tour of the mill, and it's cold in the building, so I'm preparing myself for the walkthrough.
Oh, I can imagine. No, I've been there. And it's interesting. It's not far from the office, so it's a very short walk.
Yeah.
Fantastic. Let's talk about Quilliam results because it's a project we haven't really talked about in any of our previous interviews. It's been sort of the underdog. And why don't you catch us up on the project itself? How did you acquire it? When did you acquire it? And how did the JV with Argonaut come together?
Yeah. So the Quilliam Project, it's a past producing gold mine. It produced. It was operating in the early 1980s, and there's two sections to the project. One is the Quilliam mine proper, and then the second part is the KOD zone, which is the zone which we recently drilled. This is a project which has been part of the company since I've joined the company in 2017. And the joint venture with Argonaut actually commenced in the early or in the late 1980s and hasn't been a lot of activity on the property. However, when we look at the historic drill holes, we see a number of intercepts that are very high grade. For instance, there's a hole drilled in 1987, which was 7 meters at 30 grams per ton. And so we did some follow up on some of that drilling. We drilled two holes, one of them 200 meters deep and the other one 400 meters deep. One of the holes had an intercept of 4 meters at 10 grams, and the other intercept was 2 meters at 11.7 grams, or 6 meters at 4.6 grams. And both of those intercepts are along the main structure. What we also see is downhole along the way, there's a number of 3 or 4 gram intercepts as we go down. So it looks to be a very, I'd say that this area is holding together, and it looks like there's definitely gold mineralization. So what we're looking to do with Argonaut is we're creating a 3D model of all the historical results, and with that we'll plan another drill program, probably drilling deeper than the current 400 meters to see if we can get some depth potential out of this. Regarding how Quilliam fits into our plans, we haven't done the metallurgical work to see if it could be processed through the mill with a high gold recovery. If you recall, our mill will have some gravity concentrators, so potentially it could be feed for the mill. Not a lot, but we will have some space in our mill once we get up and running, and so it becomes a very low cost add-on potentially for the company.
Low cost add-on is always good because you don't have to invest much to get far, and it's fairly decent grade. And it starts at 25 meters from what I've seen. Does the system outcrop, or tell us a bit more about the old mine and how they mined?
Yeah, so the old mine, yeah, the system would outcrop, and that was the old Willow Mine, and the old Willow Mine only operated till a depth of about 400 meters. That is not what we drilled in this program. We drilled the KOD zone, which is about a couple of 100 meters from the old mine. And in that case, that KOD zone was discovered in the late 1980s. And so these both of these systems are close to Quilliam Lake, which is about 15 kilometers north of the mill here. So again, it's within very easy trucking distance. And as you mentioned, the grades are quite high. So this could be a really good enhancing project for our, for our hub and spoke strategy.
Ernie, what does KOD stand for? You know?
Yes, I do. It stands for keep on drilling.
Oh, not Kiss of Death.
No.
Okay.
Yeah, keep on drilling. So I think the name arose because the Willow Mine, when it stopped operations, the exploration teams on site found this KOD zone, and they aptly named it Keep on Drilling. They drilled a number of holes, very, very good. And then the company which was operating it at the time was a company called Greenstone Resources. That around that same period of the late 80s, early 90s, started up a number of operations in Latin America and decided to stop doing the work in Quebec. And essentially, the deposit has not had drilling since the late 1980s, early 1990s.
Interesting. And the joint venture with Argonaut, how does it work? Like, is it a true 50-50? You're the operator, but does Argonaut contribute 50% of the cost as well?
Correct. So
Okay.
it's a JV at 50-50. We're the operators. Before we do any drilling, we have a technical meeting with Argonaut where we go over the targets. And last year we decided to put these two holes in, basically in the plunge zone. Both of these holes were very successful. So now the technical teams have met. We're currently doing a 3D model of the KOD zone, but as well, we're relooking at the Willow Mine, and we think there's a lot of depth potential at the Willow Mine as well. So looks like we're going to be doing some further drilling on this property later this year.
Yeah, fantastic. And since you're a joint 50% joint venture partner, you don't have to spend all the cash on it as well. Do you have an estimate roughly what you will be contributing, and how much have you contributed so far?
We haven't really spent too much money on the program so far. I would say we would have probably spent about $400,000 on this property, but I think going forward we're going to look to do maybe I'd say half a dozen to a dozen holes on the property, and if the holes are say are 500 meters deep. We're looking at a total cost of for a 4,000 meter drill program, and so that's going to be say about a 600-700,000 dollar program as we go forward. And I think with that we'll get a pretty good idea of the depth potential, and the potential may be to drill more and look to get this into a resource. But as you know, our hands are pretty full. We're just finishing off our PEA based on the Corner Bay property, and we're going to be submitting the permit applications for Corner Bay. So really, where Doré Copper is locked and loaded in terms of how we're planning on starting up, and all of these kind of ancillary opportunities we have in the camp. Eventually, they're going to come into play, but we're going to be starting off with Corner Bay, Devlin as our two starting mines.
Fantastic. Yeah, you mentioned the PA. I want to get to that because you mentioned it in the press release as well, and it's obviously the next big milestone for Doré Copper coming up mid of Q2. So mid Q2 means May 15th. I'm expecting the PEA to be released. Do you have some more pointers for us? Some more direction, timing wise, but also like input wise. Like what can we expect?
Yeah, so timing wise, essentially we're tracking to that pretty well. We've had a couple of delays in announcing the PEA, and a lot of those were just related to getting late assays and then doing our resource update on Corner Bay. That was a bit delayed. And so unfortunately, we've been caught into that assay cycle. What we're going to see in the PEA is an updated resource at Corner Bay, where we're going to be adding on a couple of new zones into the deposit. Our last resource update was 7.2 million tons at 3% copper, and we should see both of those figures increase. And then in the PEA, what we're planning is starting the mining operation with Corner Bay and Devlin at the same time. And then when Devlin is depleted, we would start up the Joman operation. The Joman deposit that we're modeling in the PEA is the current resource, and we fully expect that resource to grow in the future. So we see the PEA as kind of a snapshot in time. And obviously, the company will continue doing exploration activities and then get forward. However, the way permitting works in most parts of the world is that you do have to freeze your kind of conceptual mine plan, and we're doing that with the PEA, and that's kind of what we're going to be submitting for the permit applications, so we can build the mines, refurbish the mill, get the tailings operating again, and then we can start the operations. And then once we're up and running, we can do additional environmental impact studies to bring new mines into the hub and spoke.
Fantastic. Really looking forward to it. I know I could poke you a little more, ask you like what kind of input costs are you using, but that's up to the PG or like the QP there as well. So I'm not sure how much you could tell me. You want to comment on input prices? Like what kind of copper price will you be using?
So we're looking at a couple of options. Obviously, there's the option of taking long-term consensus. There's also an option of using, say, the past 24-month averages. And so we're looking at those two options for pricing in terms of metal prices. In terms of input costs, we have gotten out some quotes on some of the materials. In other cases, what we've done is we've looked at kind of historical costs of other mills. So a tricky thing is you currently have copper at $4.50 a pound. You have oil that's about $100 a barrel. Obviously, the costing we're using or the pricing we're using in the report isn't going to be spot, but some of the input costs actually are quite elevated just because of the cost environment we're in now. So we're looking to put the PEA out using a balance of those factors, reasonable pricing as well as reasonable costing.
Fantastic. Ernie, I really appreciate you shedding some light on that and adding some more color. Can't wait for the resource update, but also the PEA, obviously, to come out.
Yeah, it's going to be very interesting.
Yeah, I'll definitely have you back on the program for that as well. I'm really looking forward to the model. And in the meantime, Ernie, don't freeze to death up there in Chibougamau. And all the best. Thanks for joining us here live from the project.
Yeah, thanks speaking to you, Kai. And it seems the last time we spoke too, I was at the project too. So
I think so, yeah.
Yeah, it definitely was. It's about 30 degrees Celsius warmer now than it was then. So I'm quite happy.
Fantastic. Ernie, thank you so much for joining us. And to everybody else, thank you for watching. Please follow us on YouTube, follow us on Twitter, smash that like button. It helps us tremendously with the algorithm. More like-minded investors can see the video that way. And if you're an investor or a follower or sympathizer of Doré Copper, others will see the video. It's much appreciated, and we'll be back with more live content